Hello and welcome to FinTech Focus TV with me, Toby, and delighted to be joined today with Aleks Nowak. Good to meet you.
Yeah, likewise.
Thanks for coming in. So you're with BlockEx.
Yep.
You were named in the definitive list of the most influential FinTech companies of 2018. Congratulations.
Thank you.
There's some good names in that list and some big companies who work with us to help create that list. Tell us a little bit more about what you're doing. It's a really exciting time for the business, right?
Yeah, so BlockEx, I'll start by saying we've been doing quite a lot of things across a range of areas, financial services related, but using blockchain technology.
Yeah.
So over the last sort of 4 years, we've gone through, I guess, quite a number of pivots, mainly in terms of messaging. But at the heart of our platform is an exchange. So it's an institutional grade exchange built from the ground up to deal with blockchain-based assets. So the commercial market for that right now obviously is cryptocurrencies and ICOs, and I'll come on to that more in a moment. But we have a B2B model. So we look to provide technology, back-end liquidity to companies that are trying to participate in the space. So we have the exchange sat behind, then we have a brokerage platform that sits on top of that, which essentially is a white label platform that we can license out into retail trading companies. So as I said, right now that's with a focus on cryptocurrencies. We've just launched the ICO platform that sits on top of that as well. Yeah. But we're working on some other interesting things in the space, in sort of the non-cryptocurrency area. We're in the midst of getting our bond issuance platform ready to launch. So that will be quite an exciting and disruptive product, which essentially allows us to not only automate the sort of the full life cycle of a bond, while it's in motion, administering payments and stakeholder management, but actually the issuance of the bond itself. So encapsulating the templated legal documentation, essentially allowing an issuer to come onto the platform, go through essentially like a wizard, as if you're doing your car insurance, to make it trivial, I suppose. But drop down boxes to select the type of issuance, the term, and all those other things, and then at the end of it, spit out the legal documentation. So the great thing about a platform like that is not only does it save traditional issuers money and standard issues, but actually it opens up a new segment of the marketplace, which is very underserviced, for sort of SME access to debt and finance.
Well, this is the whole beauty of the space, isn't it? It's quite often seen as pure cryptocurrency, but the scale of it and the opportunity is so much bigger, right?
Yeah, I mean, cryptocurrency is really just the tip of the iceberg, and I guess it has grown out of a situation really where it's so difficult for fintech companies to get access to marketplaces. And cryptocurrencies have really sort of definitively proven that if institutions and banks don't want to provide access to marketplaces, then technology will come in and solve problems and sort of disintermediate the traditional incumbents, which on one hand that's great, this is a huge revolution, but on the other hand, actually what we want to be doing is going to market with products that get access to the largest possible customer base. So from our perspective, it's actually very attractive to work with institutions and to enable our technology to empower those organisations to cut their own costs and deliver benefits to the end customers, because we don't want to go out and do all that business development work again to get all the customers. We just want our technology to be out there and to be used in the transactional flow. So
I think that's disruptive is sort of a misleading term sometimes, isn't it? It's the sort of fintech revolution and disruption's been bandied around for some years, but I think particularly over the last 18 months, 2 years, you've seen a lot more of institutions and fintech disruptors sort of collide a little bit and actually work quite collaboratively together.
Yeah, well, I mean, I guess hopefully banks have learnt a lesson, from the 2000s when the advent of internet banking occurred, and you saw fintech companies sort of start to exist, I guess, and particularly the remittance space. The banks thought, well, this won't impact our business model, and then people came along like TransferWise and ate their lunch. When it came to those sorts of things, and large institutions did what they always do, which is acquire and crush, or acquire and consume into their business model. And I think the same thing will happen now in the blockchain space. And you've started to see some consolidation occur surrounding those things. But I think the problem is that with the efficiencies that systems like blockchain can bring, particularly to a large institution, they are so large that is, of course, at the expense of jobs, and it's at the expense of consolidation, intra-department, and that scale of organisational sort of change management, is almost impossible to manage, if it's a particularly large organisation, because nobody wants to give up a piece of their empire. So, it's entirely possible that, so some people will be left behind and it'll become too late.
It's a disbursement of, isn't it, in many ways as well. So people always talk about jobs being disrupted from this sort of thing, but actually it's just a replacement in certain areas of where the market goes to.
It's a removal of duplication and inefficiency. You go from a system where you have many different ledgers and pieces of data that are duplicated, are reconciled against each other, and often in large batch processes offline, to a vision where you can have a single source of truth, and a single source of truth is what empowers you within your business to be able to use the data in an efficient manner. And of course, the knock-on of this, particularly within institutions, is that departments like settlement departments really don't have very great a function anymore, because actually there's no requirement to conduct this sort of settlement process, because that can happen as part of the initial transaction. So
it's interesting times for it.
So
lots happening with you guys. It's no surprise to see you in a magazine like this, and some of the listings that people are talking about within this. We worked with Lloyds Banking Group, LSE, EY, Baringa, various different businesses to look at who were making the noise in the market in 2018. Why do you think you guys were included?
Well, I mean, the last sort of, I guess, 12, maybe 18 months for us has been the first time sort of in the last 4 years that really we've actually started to push with any kind of external marketing message. We've been very quietly building in the background, using private equity funding, which actually to date we've only used private equity funding, so we haven't been out to the market very much. But sort of in the last year, we've needed to go out and beat the drum a little bit to try and get access to things like banking for our bond platform, and the exchange platform has been going out there, and then more latterly our ICO issuance platform as well.
ICO is all about noise and marketing.
And ICO is all about noise and marketing. So I mean, obviously we spent a good whack on marketing for that, to great effect, a good return. But we've also been quite vocal, around sort of regulatory working groups and industry bodies as well, because now we're coming to the time where it's very clear that this sector of industry, sort of be cryptocurrencies or blockchain is moving beyond sort of conceptual ideas that exist in prototype form to things that actually work in production. And when the rubber meets the road, and you start to interface with end consumers or customers, then that's where regulatory implications start to occur, and that's still a very, very, very grey area in lots of cases. So that process of external sort of stakeholder engagement, I've been quite vocal in, and my colleague Ed has become very involved with a new trade body called Crypto UK. So I think getting out there and sort of explaining to people that actually what we're doing is quite legitimate, and educating people about some of the misconceptions around sort of like money laundering risk through cryptocurrencies, and seen over the last month like very ignorant comments made by the Prime Minister even about the money laundering risk. That's
it's an easy badge to throw at it.
Very easy badge to throw at it, and actually when you dig down into the weeds, if you were to invent a tool for money laundering, it wouldn't have been a cryptocurrency. There's amazing software by companies like Chainalysis and Elliptic, which allow you to sort of essentially lift the cover and turn that data into something that's very usable. And I know Chainalysis was instrumental in analysing the flow of funds, for example, and shutting down some of the dark markets on the web, and finding out who these people were. The data is all there, and as such, the risk is an order of magnitude lower. But of course, banks with their business being international remittance and
Yeah.
technologies that enable peer-to-peer transfer.
Yeah.
I think it's easy to see where friction arises in
Stir
the system.
Stir the pot a little bit. That's right.
Well, yeah, and also for people to take a risk-based approach to support business, it needs to be worth their while if they're going to spend £30,000 on conducting due diligence.
Yeah.
Business is only just sort of getting to that scale where it's worthwhile now.
Yeah. So lots and lots of stuff happening in the marketplace. A sort of demystification that you guys are doing. You guys are moving further forward. I think, we were talking earlier on. It's 4 years for the business.
Nearly 4 years. Yeah.
70 odd staff that have grown throughout that sort of period from the start of all that sort of thing.
Yep.
What's next? What's coming for you?
Well, we're about to embark on an office move just now. Not entirely sure exactly where yet, but
it's always the fun part, isn't it?
Yeah, to a more permanent home and a sort of somewhere that gives us better working space and a higher level of security as well.
Yeah.
And just continuing to sort of to grow and focus on our core products now, because we are out and we are live and everything is in production, but there are still lots and lots of areas for improvement to make it a very refined enterprise product. And that inevitably involves a lot of painful refactoring of code and perhaps feeling like you're not necessarily progressing forward when when you're tidying things up. So that's in the interim. We hope to have our bond issuance platform out at some point towards the end of the year, commercialised at least. We also have some potentially exciting partnerships coming out later this year in trade finance. Working with one of the biggest technology suppliers of supply chain management software to deliver a potentially quite exciting product later on in the year.
And massively innovative.
Yeah, I mean, just seeing where we can go, with sort of bringing products to market that aren't just conceptual, that aren't solutions looking for problems, but are actually going to deliver commercial value to people. Because we need to get ourselves to a fully revenue positive stage. Sort of in the next 2 years. So that the business will continue.
And a business that people have been you've had numerous successful rounds of.
We did 3 sort of private rounds in total. The last round taking in very, very healthy investments at a very, very good valuation. We're finally, I guess, probably for the first time in a sort of a position where we've actually got secure runway, at scale where we can afford to bring people in on market rates or better than market rates, if that's what's required to bring the talent in, and having access to top quality engineering talent is clearly really pivotal for getting things moving forward.
How are you seeing that at the moment? The talent market.
It's very difficult. We've had quite
because it's so competitive, or
I mean, there's a lot of really terrible recruiters out there who send candidates which they must know in their heart are really unsuitable, but they want to get paid. And B, the work that we're doing is technically quite complicated. We have a very, very high tempo of development, and my CTO Aleks is very, very demanding in his standards. Very detail orientated, quite rightfully so, because we're dealing with financial transactions, and it has to be robust and reliable, and not go wrong. And unfortunately, that has meant somewhat of a small wasted rate on developers. But it's really important for us to have the right people in the job. But by the other stroke, we've got a really, really amazing high caliber team, in place at the moment. Many of whom have been there for a long time. Since well before we were able to pay them properly. So it's nice now to be in a position to actually reward those people, properly for the sort of the time and effort that they've put in so far.
And what was the sort of hook for those guys to sort of come into the business at that sort of stage?
Well, I mean, I guess, part of it was, personal and, favours and, getting friends to come in. But, I think to anybody that understands, capital markets and the exchange space and finance, then it's always been relatively clear what the potential was for the business. Clearly the execution risk was enormous at the early stages. But as a consequence of that, it's actually really easy to get people excited about, the potential for sort of, disruption, as we like to say, or as I prefer to think of it, sort of the evolution of, processes. And, I thought that it would never be the case that I would, come to work in finance, as it were, because banking always seemed something that was immeasurably dull,
a little grey,
very very grey, full of old grey-haired men in grey suits. And I come from a logistics background, but actually all of these things are about processes. And I like processes, and I find them quite interesting, especially complicated processes. And coming from outside, the world of finance, to look into some of these processes and to look into some of the very convoluted ways that things work, actually to go, well, if I need to get from here to here, why don't I just go that way instead of going all around the houses? And actually that sort of external sort of sight has allowed us to sort of short circuit some of those convoluted pathways and to go back to how do we get those people in. That as an example, James Godfrey, who's our MD of Capital Markets, came in to work for us on a very very subpar salary. The lowest he's earned since 1991, as he repeatedly liked to tell us. But he.
Bad year.
91 was obviously a bad year. But he'd been managing director at Mizuho, Nomura, Commerce Bank, all big jobs previously, and he saw the potential, and he had a wonderful sort of year and a half going around the city, terrifying his former colleagues about how their game is up. But once you start to see the potential of how easy it is to make things better, I think it's quite easy to keep people engaged and on board.
I think that's the interesting part of where the market's gone to. I mean, I've been looking at talent in the city for the best part of 20 years, and it was always a no-brainer to go and work in the banks, and it was it's where it was, and then it sort of became such a fragmented market with so many digital cool things going on outside of it. It became anti-cool, but still, if you look at the sort of some of the major projects and technological advances and such like, and you work with the right sort of places with the right sort of vision and story and potential to it, and the ability to not too dramatically change the world, it becomes a really interesting place to work, right?
Well, it could be perhaps conceived as over-dramatic, to say that we might be changing the world, and that's not really how I view it on a daily basis. But the reality is that the promise of peer-to-peer systems and open market access, disintermediating the sort of the stranglehold, or in the UK's case, it's sort of the oligopoly of that the banks have on the marketplace. It could be. The future, and I think that's why it's quite compelling for developers wanting to move out of the traditional world to come and do something interesting.
Do something that's definitely the next sort of phase, isn't it?
Yeah.
Well, listen, it's a wonderful story. Congratulations for everything you've done so far, and it sounds like far more to come as well from it as the future rolls on. It's been brilliant to hear it. Congratulations again for being involved in the magazine, and we'll be talking to you again very soon, I'm sure.
All right.
Thanks to everyone for watching, and we'll see you soon on another episode of FinTech Focus TV. Thanks a lot.
Thanks.
Great to see you.